Guide to double tax treaties for businesses in Singapore. Does your Singapore company earn foreign income? If it does, the foreign income may be subject to taxation twice, once in the foreign jurisdiction, and a second time when the foreign income is remitted into Singapore. This is known as double taxation, which is when two or more countries impose taxes on the same taxpayer in respect of the same taxable income. Fortunately, your company will not be taxed twice if there is an avoidance of double taxation agreement, DTA, between Singapore and the foreign country. Find out how your Singapore companies can avoid double taxation. What is DTA? A DTA is an agreement signed between Singapore and a foreign country to relieve double taxation of income earned in one country by a resident of the other country. Are all DTAs the same? There are two types of DTAs. 1. Comprehensive DTAs, which cover all types of income such as business profits, and 2. Limited DTAs, which cover only income from shipping and/or air transport activities. Instead of tax exemptions, DTAs may provide for the reduction of tax on certain types of income. How will my business benefit from DTAs? If the relevant DTA offers tax exemption, your Singapore company will only be taxed in one jurisdiction, instead of two. If the relevant DTA offers not tax exemption but a reduction of tax rate, the same income will also be taxed in the foreign jurisdiction. Under the second scenario, the relevant DTA will provide relief for this double taxation by allowing your Singapore company to claim a credit for the amount of tax paid in the foreign jurisdiction against the Singapore tax that is payable on the same income. What taxes are covered under DTAs? DTAs only apply to income tax. Other taxes like GST, customs, and excise duties are outside the scope of Singapore's DTAs. How do I know if my company is a Singapore tax resident? A company is a tax resident in Singapore when the control and management of the company is exercised in Singapore. Typically, the location of a company's board of directors meetings, during which strategic decisions are made, is a key factor in determining where control and management is exercised. How do I qualify for DTA? The Certificate of Residence, COR, is a letter certifying that a business is a tax resident in Singapore. To enjoy tax benefits offered by DTAs, your business must submit a COR to the Foreign Tax Authority to prove that it is a Singapore tax resident. If you are a business with income flows across jurisdictions, you may realize that there are conflicting tax policies between countries. Thankfully, Singapore companies are unlikely to ever suffer from double taxation. This is because Singapore currently has 60 comprehensive DTAs in force to ensure that double taxation does not occur.